Hi, today we're going to discuss three business terms and let's get started. The first one is what we call absolute advantage. When we say absolute advantage, it means that a certain firm or company can produce a certain service or product cheaper than those of their competitors. They have this, so we call them absolute advantage. For example, in a sentence we can say China has an absolute advantage over their competitors in terms of toy productions because of the cheaper labor costs. So because the labor cost in China is more cheaper, so they can produce a certain product much cheaper than their competitors. Okay, so that's absolute advantage. Another thing is what we call explicit cost. When we say explicit cost, it means the expenses that a company needs to apply as an investment or as expenditure or as an expenses. So that is explicit cost. It can also be similar to what we call overhead costs. Okay, so for example, explicit costs are the rent, the salary or the wages that are paid by the company. So all these things are considered explicit costs. And the last thing is what we call accounting profit. So when we say accounting profit, it's similar to net income. So it's like total revenue minus the explicit cost. So that can be, as I've explained before, explicit cost can be rent, wages or salaries, and can be taxes. So what will be left will be called accounting costs. Accounting profit. So that's it for today. We have three business terms. We have absolute advantage. You produce a product much cheaper than your competitors. Number two is explicit cost. The money you need to outlay. The money that a firm or a company needs to outlay as an investment or as an expenditure or expenses. And then accounting profit, it's similar to a net income. It means the revenue of the company minus explicit cost or the overhead expenses. So I hope you've learned something this time. Thank you. Hope to see you again.